Oh, before we even go there, so we said accruals are expenses that build up over time since you're not paying that bill. So now, how do we treat accruals in the financial statements? Write this down. For accruals in the financial statements, the way you deal with them, you add them to the expense in the statement of profit or loss. All right. For example, if there's an electricity expense on the trial balance, then you hear there's also an accrued electricity expense. You're going to add the two in the statement of profit or loss. Then in the balance sheet, that accrual is going to appear as a current liability. So take note of that. And then you're back to prepayments. What are prepayments? Imagine you pay for your own tuition fees for 2 years in advance. That is a prepayment. Yes, the network on your end, Madam Evelyn, you are breaking. Like prepayments, these are things that we pay for in advance, right? Yes. So prepayments, usually the way we deal with them on the income statement, statement of profit or loss. All right, let's say there's an electricity expense and then there's a prepayment, right? That prepayment, you're going to deduct it from the expense in the statement of profit or loss. I'm not showing this, I haven't shared any screen yet. We are warming up. That's actually a good idea. That's a good idea. So accruals you add to the expense, add to the expense in the this PO means statement of profit or loss. Right? Statement of profit or loss. Then it is a current liability. This is for accrued expenses. Current liability in the balance sheet. Balance sheet BS here. Yes. Another question? And prepaid expenses. Now, in this question that was given to you, there was no trial balance where you can add these two. But I believe in the your first assignment for the for the financial statements, this what I'm illustrating will be shown in there. So here you deduct from the expense in the statement of profit or loss (PL), and then it is a current asset in the balance sheet. And the journal entry for an accrued expense, very important to know this. So here's debit, credit. You're going to credit the expense as if you carried it, and then you debit the expense, and then you credit the expense payable, or maybe accrued expense, whichever you feel comfortable with. Here, right? Expense payable. That's the journal entry for accrued expenses. Any questions? And in the test, they mentioned accruals. There was only one accrual in that question. You should have named it more prepayments or accruals and repayments. So, any questions on this, what I've written here before we now look at prepaid expenses? So, the prepayment, you're going to deduct it from the expense, the amount that is listed on the trial balance. All right, then it is a current asset. Here for cross, I wrote it has to be liability here. Cross current liability. Yes, it is a current asset in the balance sheet. Colleagues, why didn't you tell me I already wrote this here? I've already written for the current asset. Why didn't you let me know? This is what I'm writing here. I've already written it. Yes, prepaid expenses. So now, prepaid expenses, there are two ways you can deal with them. There is the asset method and the expense method. All right, so I'm going to show you, I'm going to illustrate that in the question. All right, let's go to the question first. We read it. Oh, have you taken down these notes? For prepayments, I'll illustrate for you the journal entries and what's supposed to be done as we were going to see in the question. But have you taken down these notes? I can switch the screen. Okay, I've had someone to I said I wait for a minute. So let me know once you're ready. All right. So we go to the question here. It says on 1st January, the following balances, among others, stood in the books of B. Baxter. Light and heating account debit 192 kwacha. Insurance account, there's the debit of 1,410 kwacha. So, colleagues, these are expense accounts. All right. So, it's only right for an expense account to have a debit balance. During the year ended 31st December 2018, the information related to these accounts is as follows. First information, fire insurance 1,164 covering the year ended 31st May 2019 was paid. Right. So here, this is a prepayment. You paid, so according to this information, it's like on 31st December, you paid for this fire insurance, which is going to reach up to May 2019. All right. So this is the first instance of a prepayment. All right. So this is what happens whenever there's a prepayment. As I said, there are two methods. There's the expense method and the asset method. I use the expense method because it's the one which is in line with the how you make the adjustments or prepayments in the financial statement. Right. So using the expense method. So with the expense method, the first thing that you're going to do is you record first the initial entry. All right. So we paid for fire insurance on 31st December 2018. It's supposed to run to 31st May 2019. So that's for how many months? January, February, March, April, May. So this is how long this payment is supposed to last. That's the duration. That's for 5 months, right? So we paid for it on 31st December. So the general entry. Colleagues, what's the general entry whenever you pay or pay for an expense? What is the Journal entry. Here I assume we paid by cash because it never said by check. So what are we debiting and what are we crediting? Oh, it's this one here. This makeup test question here. We'll come to that. We haven't yet reached that stage. Right? The question says you're required to write up the accounts for lighting and heating and for insurance. So after we do these general entries, I'm going to be showing what is going to go in the insurance account and the lighting and heating account. So like for this one, this is going to the insurance account. All right. So maybe let me even open them up. Lighting and insurance, we put the balances. So both of these are expense accounts. Lighting and heating, LH, and we have insurance. What was the balance for lighting and heating? 1164, and then insurance 1464. Yeah, so you open up the T accounts for both. Then as you go through each sentence, we do the journal entries and we see what happens, where figures need to go, what needs to be debited and what needs to be credited. Yes. So when you pay for an expense, what is the journal entry that how do we generalize that? Okay, okay. So here was we paid by cash. Mm-hmm. Yes, you debit. Yes, you debit the expense account. All right. So here, how much we're debiting? Let's see, 1164. So we say this is what was this? Fire insurance. So for this all types of insurance, we're all going to just put them in one insurance account. So fire insurance, we debit 1164. Put the wrong balances. Debit 1164, and cash also credit 1 1. Cash is an asset. A reduction in an asset according to the double entry rules, you credit. Fire insurance is an expense. According to the double entry rules, whenever you incur an expense, you debit. Now, in this question here, this person paid for this on 31st December. And you have to make the balances in the account for 31st December. So there's not going to be any adjustment made to this journal entry. All right. The adjustment is going to be made in the next year after we use up the first month, the second month, and the third month. All right. But for here, since it was paid on 31st December at the year end, all right. So the entry will just end here. There will be no adjustment because none of the prepayment has been used yet. Now let me illustrate to you how the prepayments work in the expense method. Right? If it comes to 31st January 2019, the first month, I'll show you how we do the adjusting entry. So with prepayments, first you want to find out what is the monthly expense. This amount was paid 1164 and this prepayment is for 5 months. So to get the monthly expense, you get 1164. What is 1164 divided by 5? 282.8. 282.8. Okay, 2.8. Okay. So this is the monthly charge for each month. So if next year comes and let's say this it's the 31st of January, all right, where 1 month gets used up, this is how the journal entry will be, the adjusting journal entry. You are going to debit the prepayment. This is the one that is going to appear as an asset on the balance sheet, 232.8. Then you're going to credit the expense. So you credit fire insurance. Two 3.28. If another month passes, the same journal entry. You debit 232.8, you credit fire insurance. The third month comes until you reach 5 months, until the prepayment has been used up. So what happens with the expense method is you record the expense as a whole. Then as it's getting used up, as the months pass, you'll be deducting the expense. All right. But now in this case here, since it was paid for on the 31st of December 2018, and we want the balances of the account on 31st December 2018, meaning the prepayment hasn't been used yet. So you cannot do these journal entries. These are just journal entries. Until the months start to pass, then each month that passes, you debit prepayment. This is the asset on the current asset on the balance sheet. And then you credit the expense. This is shown by that. It's illustrated here with this rule here, where we say that You deduct from the expense. This is that credit entry. This credit entry deducts from the expense when you're making adjustments in the statement of profit or loss. So, are there any questions before we move further? So, for this question, you just debit the insurance account 1164. And as each month comes, you always be crediting here to 232.8, 232.8 until this expense gets used up. Yes. Any questions, colleagues? Similar with this one. General insurance 1464 covering the year ended 31st July was paid. So this is going to run since you've paid for it on 31st December. So January, February, March, April, May, June. This is for July, 7 months. This general insurance. It is for 7 months. So first thing you do, 31st December 2018, you record the payment using the expense method. You debit general insurance. And you credit cash. One four six four. And cash here, so 1464. Then you can find out the monthly charge so that when January passes, you know how much gets deducted. When February passes, you know how much gets deducted. As I said, with the expense method, you record the expense as a whole, and as it is being used up, it's reducing. So here, we also debit the insurance account 1,464. Any questions before we move further? An insurance rebate of 82 kwacha was received on 31st June. So a rebate is more like a refund, or maybe like the insurance company has sent you back some money. Maybe you paid over somehow, or maybe there was a miscalculation. So the insurance company is it's sending you back the money. All right. So for this transaction here, the journal entry is you debit cash or bank. Let's say since it was Is there anything about a bank? No. So we debit cash 82 kwacha, showing that we have received this money back, this rebate, and we credit insurance. Since the money is coming from the insurance, so meaning it's reducing the insurance expense. So we credit insurance 82 kwacha. We can open up the insurance rebate account, but in this case, we'll just put it in the insurance account here. It's 82 kwacha. Any questions? Yes, for the insurance account, those are the only transactions because the remaining ones are for the lighting and heating. So we can get the balance for the insurance account. So as always, you add up both sides, debit and credit. So let's add them up. What do we get on our, since the debit side is higher, so what is the balance on the debit side? Our balance carried down always comes on the lower side, so it will come this side on the credit side. So you put 4038 on both sides. And what is 4038 minus 82? And this is the balance for this account. Go to the next transactions. Number 4, electricity bills of 1,300 were paid. So electricity bills, we can relate them to the lighting and heating account. It says electricity bills. Okay. Mm-hmm. Okay, so electricity bills of 1,300 were paid. So you debit electricity bills 1,300 and you credit cash. So this 1,300, excuse me, will go to lighting and heating. An electricity bill of 162 kwacha for December 2018 was unpaid as on 31st December 2018. So we've got an accrual here. So as I said, with accruals, you debit electricity bill 162, then electricity bill payable 162. And so we'll debit our lighting and heating account 162. Then you have another account, electricity payable, that's a liability account. Oil bills of 810 kwacha were paid. So these oil bills, I believe they're relating to lighting and heating. So again, you debit 810 oil bills and you credit cash 810. Stock of oil on 31st December 2017 was 205. This is the closing inventory. This has nothing to do with these two accounts. This is your closing inventory. So nothing will happen with it. To just remain there. It won't affect any of your accounts. So again, we tabulate what's our total here. The carried down comes on the lower side, which is the credit side. So when we add these numbers, I've I've only written on the thing on this account the amounts. You can see this the lighting and heating account. Mm. So okay, so all those oil bills, electricity bills, we take them to lighting and heating. So you total up 192 plus 1,300 plus 162 plus 810. 2 2 what? Mm-hmm. 2,464. 464 both sides here. Balance carried down same amount 2464. Balance brought down 2464. And that is all that you needed to do.